Today I'm going to talk about cyber insurance coverage. Cyber insurance covered by your policy depends, of course, on the particulars of your policy, but there are a variety of different insurance offerings that are commonly on the market today, and this is an overview of them. Just to give you a quick outline, we're going to go through the different elements of cyber insurance that are commonly available and just talk briefly about each one of them. I just want to make sure that you understand that coverage is more detailed than what we can explain here, and legal issues abound. You really need to contact your agent to get more answers, and you need to read your policy. So the business income loss is the first area of cyber security insurance coverage. Basically, this is a case where somebody breaks into a computer system, and that break-in, that compromise of security, directly leads to network disruption. So you're unable to use your internal network or the external network or whatever network. And during the disruption, that is during the period of restoring from the disruption, you lose income. So whatever income you lose, starting at whatever the deductible of the policy is, up until the maximum value of the policy is what you can potentially recover. Just to be clear, lost income doesn't include income that you made up another day. So if you have an outage and somebody can't, contact you and they contact you the next day, then you're not covered. Another aspect of that, just again, so we're clear, is that it's income loss which you have to show. So you have to understand how you show that you've lost income from it. So that's a little bit complicated. There's also dependent business income loss. Basically, a dependent business, that is a business that depends on you, their lost income is covered if it would have been covered if it were your business. So, for example, I run a business and I have another business that depends on the services of my first business, and my first business has an outage. And if I have dependent business income loss covered, then it covers the lost income from that other business that had the same outage that I had because it depended on me. Digital asset restoration costs. This is the cost that you incur by alteration, destruction, damage, or loss of digital assets, whatever they are. Presumably, you have to identify what those assets are in advance. You need to have an inventory of some sort that says, here's what they are. And there's not a valuation. That is, we don't care what they're worth to you. It's only a matter of the cost to restore them. Also, this is only applicable when the loss is solely and directly from a security compromise. That is, it can't be that there was a security compromise and you failed to do your backups. It has to be that it's the only reason is because of the security compromise. Then there's cyber extortion threat. A lot of people don't necessarily recognize that there is such a threat from cyber extortion, but there certainly is. And this has to do with the expenses and the payments made directly from the extortion threat. So if you have an extortion threat and it costs you money to contact the police or to deliver any payments that you might make to them or to investigate the process, whatever those direct costs are from the extortion threat, and the payments that you made against that threat, that's what's covered. Now, I should point out that insurance companies have a right to be involved. So if you're being extorted, you have to notify the insurance company, and they come in and act on your behalf because they're paying the money for it. Privacy liability is another area of coverage. That's damages and claims of expenses that are legally required to be paid. So a court of law has to actually rule that you have to pay this money because of a wrongful act. That is something that your company did that was wrong and that harms a third party or an employee. So they only pay for the damages that the third party or the employee gets compensated for, and only based on the legally mandated requirements. Privacy regulatory claims. That's a completely different issue. There are regulations around privacy. If there are fines from those regulations, if there are consumer redress funds, so you have to put money into the fund, and if there are claim expenses that are legally required from the regulatory claim, and that's a result of a wrongful act. So it can't be an accident. It has to be some malicious wrongful act, something that somebody did wrong. and that resulted in a regulatory claim. That is, you violated some regulation and the government came and fined you for it. And it has to be legally required. And again, the insurance company will try and step in and defend you or settle, however that works. Then there's security breach response. This is security breach is essentially somebody broke in. Again, the definitions are made more clear in the actual policy language. This is the crisis management cost and the breach response cost. So somebody breaks in and it's an emergency. You have to call in some company to help you respond, help you batten down the hatches, protect your assets, get you back functioning in a more secure mode for whatever reason. And this is always from a security breach related to personal, non-public information about your customers or employees. So, for example, if it has to do with protected information about individuals, a lot of that information is their name and address and so forth. Well, people's names and addresses are generally public information. So it has to be non-public information. And it can't be about your company. It has to be about your customers or your employees. And then there's security liability. That has to deal with damages and claims expenses from a wrongful act. Again, a wrongful act, there's some set of damages and expenses, and those are the things that the insurance covers. Multimedia liability is sort of interesting. This is, again, damages and claim expenses, actual damages, actual expenses that are legally obligated. So somehow they have to be contractually occurred or the result of some legal process from a wrongful act associated with multimedia. So, what is that? Well, for example, you have one of your employees that working for the company, but not under direct orders from the executive management to do it, goes into Twitter and does something like, says something nasty about the competitor, and it turns out that it's not true and it's libelous, and you get sued for it, then that's an example of something that multimedia liability might reasonably cover. Here are some examples of coverage or not coverage. North Korea decides to attack your company. Well, this is an act by a government, and almost always it's under force majeure. It's not covered, usually. There may be some cases where your insurance covers it. A terrorist group is behind attacks on your site. Again, acts of terror are generally excluded from coverage. Of course, there's an attribution problem that somebody has to figure out who did it in order to be definitive about this. Here's another one. A top executive decides to disable a security feature, and that produces one of these harmful things. Well, acts of or ordered by executives are not normally covered. So if you have an executive who's a responsible party and he says, nope, disable it, the insurance isn't likely to cover it. A worker makes a mistake and gives a password to an attacker. This happens all the time. You get an email that looks like it's from the company or what have you. Well, that's the direct results of such an act are usually covered. So, it's an error, it's an omission, it's a oops, I was fooled. That's the kind of thing that insurance covers. Again, less the deductible and only up to the maximum coverage level. A winter storm disables computer access and you lose customers. Direct loss of sales to those customers is usually covered. And in fact, a significant portion of the outages of this sort are because of people that go to another company to buy something because, there was a hurricane and so you couldn't sell it to them. You detect an attack and don't tell the insurer till a day later. Well, the problem here is that, you have an obligation to report in a timely fashion. Imagine if you had a fire in your house or a car accident and you were able to call them up, but you didn't bother to call them till the next day. Or there's a fire in your house and you just didn't call anybody. So guess what? If you don't call the insurance company, then they don't have a chance to mitigate the damages. So, they have an ability to mitigate damages to themselves by acting to help protect you and them from the harm. So you have to let them know in a timely fashion. What's timely is another issue, in a timely fashion. Here's another example of coverage. Law enforcement plants a bugging device in your computer. Well, acts by government, as I identified, are usually not covered. You don't do what you said you were going to do. So typically for cyber insurance, you have a form to fill out or an assessment is done to figure out, what protective measures you have in place to figure out whether you're insurable, and if you are, what rates to charge you. Well, if you don't tell the truth, or you don't really know what you're talking about, or your representative doesn't tell what you actually had in place, and what they told about or didn't tell about that was wrong ended up resulting in the bad outcomes, then you're not going to get paid off, almost certainly. Now, if you knowingly did it, then lying to insurers to bind coverage is a fraud in all 50 states of the United States, and you can actually get arrested for it. And people commit insurance fraud all the time. But even if you accidentally forget it, they're not liable for things that you don't tell them about. So you have an obligation to tell them what you're doing to protect the information, to the extent that they ask you. If they don't ask you about it, that's a different issue. It's the insurer's obligation to find out, and your obligation to tell them. You call the insurer as soon as an extortion threat comes up. Well, the insurer acting for you is likely to be liable for whatever consequences come at that point if you have the extortion threat insurance. You follow all the laws to the best of your ability, and you get hacked. Somebody breaks in and causes something to happen that violates a regulatory requirement. Generally, the direct results of that hack will be covered, again, depending on whether you have that particular element of insurance in your policy. One of your employees creates a negative media buzz. Whatever buzz is in the media, if it's negative, it's probably not good. If you call the insurer right away, typically mitigation is covered. And typically, they'll come up with public relations right away to try to reduce the impact of it. You use a third-party provider who's non-insured, and they fail. Well, you better, get to reading your policy for the details on this one. That's complicated. You typically should not be using third-party providers that don't have adequate insurance, especially if you depend on them for your business. So you should check and require that they have insurance, and get the insurance company to identify you as an additional insured on their policy and know how much the coverage is. You want to get more details? Well, each of the terms that are used in insurance policies has specific definitions and specific exclusions. So, expenses may not include overhead, employee wages, salaries, fees, and so forth. So it might only be out-of-pocket expenses in addition to the normal operating expenses of your business. Another example, acts of executive management or acts at their orders are commonly excluded. Restoration costs, another example. When they talk about restoring things, that doesn't include improvements. So if you had a 3-year-old computer, they're only obligated to replace it with a 3-year-old computer if it got damaged somehow. And guess what? 3-year-old computers are very inexpensive. So it's not what you paid for it, it's what they have to pay to restore it. If you get something that's newer, they'll price out a 3-year-old computer, and that's what they'll use as the basis for what you get repaid. Security wrongful act typically is the act of you or your agents and assigns, and not of independent third parties. So a wrongful act is something where somebody had an obligation to be rightful, did something wrong. Whereas an external attack isn't a wrongful act. That's just somebody out there in the internet doing something bad. Force majeure, as I mentioned before, acts by governments may be and are often excluded. You really need to read your policy for coverage details. Also understand that these are negotiable. You don't have to just say yes to whatever the policy says. You negotiate terms with the underwriters, and you can pay them more or less to get different coverage. And they may be flexible, and if they're not, go to another insurance provider. There's plenty of competition in the market. You want to compare coverage to find the true value of your insurance, and talk to your agent or your broker to get a better understanding.